Welcome, traders. Welcome to another broadcast of Live Trading Talk with Oliver Velez. My name is Oliver Velez, of course, and I am your trader for life. Or at least that's what I want to be. Now, traders, we have just completed probably one of the most interesting weeks in all of 2016. And I say that because of a variety of reasons, actually. Not only from an earnings perspective, we've had some really huge earnings surprises amongst some of your heavyweights in corporate America. From an overall market perspective and from the perspective of my traders, my company as well, I am very proud to report that we have set a milestone this week. This is one of the biggest and most profitable weeks in my firm's history. And I would like to take a moment out to congratulate all of my traders throughout the world who are part of our growing and international IFT trading community, trading family. Congratulations, you guys are awesome. I love you in many respects. You are my superheroes, especially this week. So congratulations to all of those. This is also one of the most phenomenal months in our history as well. And things are crescendoing. They are growing. My traders are getting sharper, more astute as they continue to accumulate and rack up time in the chair. And this is something that I am constantly talking about with my traders, is that it does require time in the chair. There are so many people in this industry who want the popcorn version of success in the market. They want an out. They want a shortcut. They want instantaneous success. And this is a topic that I actually have slated to talk about during one of my fireside chats on Periscope. But I do want to take a moment out to touch upon this, if I may. There are so many people that come into my industry, and I've been in this industry almost 30 years. There's so many people that come into my industry and they disrespect it in some way they disrespect it in a variety of ways as far as I'm concerned. And I know my industry is not unique, but I think the level of disrespect is just higher. And that disrespect comes from a lack of understanding. It comes from ignorance, not in the bad sense of the word, but in ignoring common sense. Ignorance is a derivative of the word that basically means that you ignore the truth. You ignore reality. You ignore common sense. So ignorance in that form of the word, and just simply not knowing that for some reason that, people understand that in order to become a doctor, a successful doctor, you did not start 3 months ago. That if you are one of the world's top attorneys, and you can argue points with the best of them internationally, and are recognized as such, you did not start 6 weeks ago. That if someone is one of the best athletes in any of the world's most recognized sports, that they understand that that level of expertise, that level of greatness did not happen because they started 6 months ago, or a year, or even 2 years. These people have dedicated a healthy chunk of their entire existence to get to where they are. And when it comes to other areas of life, we recognize this. We recognize that adulthood and maturity and intelligence do not instantly appear at the moment that you decide that, hey, I just want to be intelligent all of a sudden. I want to be an adult. I want to be mature. I want to be disciplined. They think that discipline is something that you can snap your fingers together and just become disciplined simply because that happens to be the whim of the moment in your particular life. And so they step into my world, a world that I have helped build brick by brick for 30 years. They step into my industry and they believe that they can come in and basically start experiencing the level of consistency and mastery and success that some of the people I know without putting in time in the chair, without investing in becoming something different from who you are today. That this is one of the most challenging endeavors on earth because it requires that you become a master of yourself before you can ever have a hope of becoming a master of the markets. And this is my main point. How many people in life master themselves? It is difficult because it requires self-mastery. This is not hitting the lotto. This is not taking a casual trip to Vegas with $4,000 in spare change to bet at the roulette wheel. Oh no, if you think that, then you will forever be on the outside of this game. That there is a reason why the people at the top of the pyramid in this industry that we call trading are at the top of the pyramid year after year after year or somewhere close to it. There is a reason why you keep hearing the same names over and over and over again. There's a reason why success is in a small circle, and that it's basically seemingly limited to just this small circle. There's a reason for that. There's a reason, just like there's a reason why the same poker masters wind up at the World Series of Poker almost every single year. That is not by mistake. That they're not gambling. Yes, that there are gamblers in my industry. There are those who approach it just like as a matter of fact, the vast majority are gambling. And thank God that's the case because they provide the money for me to take. Yes, we want gamblers. We want the message, come on in, the water's warm. Bring your bankroll, bring your wallet, bring your ignorance, bring your faulty beliefs and your erroneous notions. Bring them. I've got something for that. All right? In fact, we want the vast majority of people to be that way. I just don't want my traders to be like that. I don't want you to be like that. You take precious time out of your life to listen to me blab about one of the most passionate things in my life, then I don't want you to be that way. You follow me on the social networks, on Periscope, you watch me trade live, you converse with me on Facebook and Instagram. Okay, I don't want you to be a part of that group, but I want the vast majority of the world to be. I want them underestimating this game. I want them thinking that this is something that like a 5-minute microwave meal that you can pop in, press 5 minutes, and you're a master. I want them to think that. I want them to believe that. But in a way, it's fundamentally disrespectful to people like me and my traders who put in work, who every single day battle themselves, the weaker part of themselves. They go to work on eliminating their Achilles heels. They are not afraid to look at the darker side of themselves and to recognize that as evil, as sin, as the devil, and to map out a plan to squash it, to eliminate it, because they know at the end of the elimination of every flaw is greater profitability, greater mastery. That they begin to realize that the discovery of my faults is not a bad thing. It's a good thing because every fault I eliminate is one more barrier that is no longer in the way to me reaching the ultimate level of mastery, that every single flaw I eliminate automatically means that I'm more profitable. And then later, this game stops becoming a game of making money. It starts to become a game of self-mastery. It starts to become a game of improving you as a person, as a human being, as someone who becomes more disciplined, as a person who becomes the individual who can say something and do it. And trading starts to become spiritual to my traders. Something that is far grander and more ethereal than buying something for $1 and selling it for $2. It might start there, but then it becomes something special. And then we see individuals enter this world as if it's a game. As if, you guys don't do anything. As if it doesn't really require work. It's like rolling a pair of dice and just sometimes you win and sometimes you lose. Oh my God. How thick the level of ignorance and arrogance amongst the low. There is a statement that I grew up hearing my entire life from my mother, who was a voracious reader of the Bible. And she would always say, Oliver, you cannot cast pearls before swine, because they won't recognize their value. It's a waste. And I find that to be true, not only just in my industry, but as a general principle throughout life. There will always be only a small percentage of the people who recognizes value. And that small number of people, no matter what your field, if you develop the talent of seeing what is valuable in the face of signs that suggest that it's not valuable, you will never want for the rest of your life. It's impossible. You see, trading is simply about finding value when others don't see value. You can take a very popular or successful real estate flipper of homes. They see value where other people see a mess, see too much work. And they're successful because they see gems where others see garbage. Warren Buffett is known as a value investor and has been largely successful at that, greatly successful, I should say, by simply seeing value where others don't and being patient enough to wait for that value to materialize in the outer world for all to see. But let me tell you this. You can't find another opportunity. You can't find another activity on this planet Earth that offers what trading can offer. You can't find any kitchen-based career that can come close to trading, where from your kitchen table in less than 20 minutes, you have the ability to make more than most people make in an entire month, and some people throughout the world in an entire year. That you will be afforded the opportunity to pick up your children if you so desire every single day from school. That you can be the dad in flip-flops. That the mothers wonder, how does this guy in flip-flops, how is he here with us every single day? And how is he driving that car? Is he unemployed? You will relish those things. There is no other activity that allows you the ability to take your family on a 6-month vacation around the world and never miss a beat. Never miss an opportunity for your 20 minutes or 30 minutes or 1 hour to do your thing. That with a simple laptop computer and an internet connection, you are in business without ever missing a step, without the need for offices, without the need for employees, without the need for paper clips and pencils and material and inventory and special insurances without the need to get out of your bed when you don't want to and go to someone else's office and work on their dream. This is not necessarily about getting rich or wealthy. It's about being free and being independent traders. This is about the greatest form of wealth outside of your health. And it is not money. It is the ability to live your life the way you want to on your own terms, without fear, without the need to please anybody who doesn't like the way you've chosen to live. To me, the greatest level of wealth is that your freedom to live the way you want to live, how you want to live it, on your terms, as long as that doesn't harm anyone. That's what freedom is. And trading offers that level of freedom at its ultimate, in its ultimate form. Oh, sure, you could become an entrepreneur and make a lot of money doing something else. You can own a complete large chain of hardware stores, but try not to show up one day. Try to do that consistently and see what happens to your business. You are still chained to your thing. You can't take a 4-month trip to Tahiti, sit in a hut looking over some of the bluest or turquoise waters on the planet, and still run your business. You can be the greatest lawyer on planet Earth, and your hourly fee could be $1,000 an hour. Meanwhile, a trader from his kitchen table can make that in 8 minutes. But not only that, you really, as a great lawyer, are working for a client. And let me tell you something. When that client gets angry, you had better be listening. You are still not free. You are still going to get calls 2 o'clock in the morning, screaming clients, demanding that you do better. You can be the greatest doctor on the planet, one of the highest level of surgeons in existence, and trust me, we need them. But you can be pulled out of bed or away from Thanksgiving dinner with one simple beep of your beeper, a call or text on your cell phone. And your profession will demand that you leave when you really don't want to leave. Now, to me, those things are needed. We need some lawyers. We don't need as many as we have, but we need some. We need doctors in the world. Of course, we need surgeons in the world. And we need hardware store owners. And we need restaurant owners. And thank God for them. But that is not me. That is not free. That is not being totally independent. I don't care how wealthy those activities make you. That is not independence to me. That is not living your life on your own terms. Nothing in existence today can do that aside from trading. And I have been spreading this message all over the world for the past 22 years. I have been a professional trader for 29 and a half years from now. I began training traders 22 years ago, and every time I've given the opportunity to speak through a mic or stand on a stage or address a group of people, this is my message. It will always be my message, that this is the last bastion of total independence. This is the only activity left today known to man that offers the level of freedom and independence that every individual was born to live. Now, granted, everyone can't do this. In fact, most people can't. And that's what makes it so special. I don't want to change that. I can't change it, in fact. This industry has a 92% failure rate, and I think that's a little bit generous. I call us, those who make it, those who last, I call us the 8%ers. And we need the continuous 92%. We need that. That is what gives us our freedom. Those who bring their wallets, those who bring their ignorance, their lack of training, those who think they can do this on their own, those who think they can just read a book and come to my world and take money off my table. We love that. We love them. Those who think training is not necessary, we love that. Those who think that if I just go to this seminar, I'm done, I'm good, I'm going to be a success after that. We love that. Those who say, well, no, I've just joined this chat room, so I'm going to start taking money from all the other traders out there. Oh, we love that. We love the 92%. They're called depositors for us. Someone's got to deposit the money. See, the 8%ers don't deposit. They are takers. But if you had all takers, then the game would dry up, wouldn't it? It would become commoditized. If there were more takers than depositors, eventually the takers would devour or deplete the resources of depositors. You always need an imbalance. It's designed to be this way. You will never, ever have the majority of people winning in this game. It can't happen. It's not supposed to happen. It's rigged not to happen. The whole game is designed for the vast majority to fall by the wayside, to fail. Why else would opening up a brokerage account in less than 5 minutes be the case? Is there a warning that says, wait a minute, you do realize that there is a 92% failure rate here, and if you don't have proper training from someone who's already done this, you are going to lose all of your money. You do realize that. There's no warning that says that when you're opening up a brokerage account, ready to make your deposit. In fact, the commercials say, come on in. In fact, the commercials say 500 free trades, come on in. Because it's not that we want. We want your deposit. We want anything that makes the message, it's easy, come on in, to be out there. No problem. Open up an account in 20 minutes and you'll be up and running and trading. We want that. We need that. Spread this message to those who take out their time to listen to me, to follow me, to ask questions, to inquire. And so I feel an obligation to share the inner message, but this is not what the industry tells you. Is it? Is this what the industry tells you? Of course it doesn't. Guys, I just had an idea. I want to see if I can call Dr. Dan Milkarski. Dr. Dan is one of my top traders. He is also the director of our colony of traders. He's been with me a long time. And I want to see if we can get him on the phone. Let's just see that. Let's just see if we can get him on the phone here. And who is that calling me? Who doesn't know I'm doing my radio show today? How rude is that? Let's see if we can call Dan. Be quiet. Be very, very quiet. Quiet.
We.
Dr. Dan, what's up, buddy?
What's up, man? What are you doing?
How you doing?
Hey, man, listen, Elvin was in Periscope today, and he comes in the room. He's like, hey, Obi's doing Guild. And I said, tell him to stop copying my trades. Man, that was nice. Earnings play. Did you rock that shit or what, boy?
Yeah. I hit Guild, but Dr. Dan, we are on the air, sir.
What do you mean we're on the air?
We're on the air. We have to keep it PG here.
What are you talking about?
I've got you on the air, man. I just gave you a call. You're like talking to like maybe 1,200 people right now.
We're on the air. You got me on the Skype channel on the radio?
Got you on the radio, buddy.
Nah. All right. Well, hold on then. You ready?
I'm ready.
Sounds of OLV 102 FM.
There you go.
You got to give me a
I'm
heads up.
sorry, man. I'm sorry for surprising you like that. But what's up with Guild? I know you knocked that down pretty hard today.
Yeah, you know that those earnings trades are nice, man.
No,
Like
absolutely.
he said you were doing Guild. I was like, Oliver's doing Guild.
I
Like,
know. I was outside of my comfort zone today. I mean, not totally. I mean, Dan, I've always traded Guild. If I'm going to trade anything, you're going to see me trade Apple 98% of the time. I'm going to trade Guild inside of that 2%. I'm going to trade Facebook. I'm going to trade Guild. I'll trade Starbucks every now and then. I'll trade QCOM every now and then, and I'll trade Netflix every now and then. And there might be a couple of other stragglers, but those are my key stocks. And a lot of times I'm looking at those as barometers of the overall market. But Guild today, with the huge gap down, I just couldn't take my eyes off of it, and my fingers found themselves just trading it.
No, absolutely. No, I mean when I saw that this morning, I was like, all right, this thing's in play. There's no question about it. The moves are nice. The spread's good.
Nice.
And it's easy to capture quick buck or a little bit more. The other one that a lot of our traders have been trying to trade late, and I keep telling them they got to be on their guard with it. But you talk about moves. This last month or two has been Nugget. I mean, this triple levered thing has been, $10, $12 intraday.
Dude, it was $3.50 just a couple of months ago. It's now what, $1.13?
Yeah, they did that reverse split because nobody was trading it anymore.
Right, of course.
So they pump it back up, and now all of a sudden the volume is through the roof on this thing, and the moves have been,
it's been huge.
Just today. I think it had from the gap, I think it had a $20 move today.
I know. I cannot have, Dan, a Periscope session without someone asking, what do you think about NUGT? I'm in Nugent. So,
crazy.
Absolutely. Very, very crazy. But I'm glad to have you here. We haven't done this in a while. I'm sorry for surprising you.
No, that's all right. It's a good Friday surprise.
Absolutely. I didn't know if I was going to be able to get you, but here we are.
Yeah, no, I got kids are home. I got the nanny over, and I'm trying to just get some stuff caught up here before the 6 o'clock hour. So I was sitting at the computer doing a little work, and I saw the Skype ring. I just figured you were giving me a buzz. I was like, why is he not calling? I should have thought of that. I'm like, why is he not calling my cell phone? What's going on? That should have been my first clue right there.
That's very true, man. And you got a little glass of wine here. Listen, Dan, the topic that I slated to talk about today, I think, is an interesting one because this, as you know, has been a raging debate for decades. This debate goes all the way back to the beginning of the 1920s. And the topic is obviously fundamental analysis versus technical analysis. And which is better, or is a combination of both better, or does one typically make more money than the other? And as you know, Dan, we have always attacked the market from a technical point of view, but it's still a question that we have to answer from individuals coming into our world. Very, very, very regularly. So I just felt it would be great to sort of bat this around, debate the issue a little bit, and try to settle it once and for all. Like, we're going to be the ones to settle this after decades and decades of confusion,
Sure. It's a good topic, and I can, from my own history, I made the switch, coming out of school as a finance major, and I'm going to date myself here because, graduating back in 91, that's a long time ago, but they still teach the same stuff today that they did back then. It's just a lot of it is more automated with what they can do on their computers and their phones and stuff. They don't have to do the longhand version. Like, we used to have to write present value and future value models on paper, and we used to have to do dividend forecasting formulas. And in every class I took, that's what it was. You had to take a company's earnings, you looked at the EBITDA, and you looked at the EPS and their dividend, you tried to forecast the price projection. I never saw a single candlestick type stock chart in my 4 years of study. Not one. I just saw the open, high, low, close, bar chart. You looked at price. Nobody talked about anything in school about technical analysis.
Absolutely.
It didn't even. I don't know how that was possible, that I didn't even, that it was never even presented as an option, but that's what happened. So when I got out of school, that's all I knew was fundamentals. And, I wasn't doing a lot of trading back then, but when I started to get into it and started to learn about this wonderful thing called technical analysis, actually took a course at this this guy was speaking. His name was Oliver Velez, and I was up in New York, and I was thinking about taking the Series 7 exam, and was going to be a broker and all that, and I was like, I'm going to check this course out. And I remember we've joked about this story, and I don't know how many people have heard it, but it's pretty funny, where I came into the class. It was one of your first pristine classes ever, right?
Yes.
Right when you started the company. And I sit
This is like 95, 96, something like that, right?
Yeah. And I sit through the first 2 hours, and you're up there talking about green bars and red bars, and you're going crazy on your whiteboard, right? And I'm like, what the H is this guy talking about, man? What? Green bars and red bars? What? And I came up to you and I said, listen, man, I think I made a mistake. I signed up for this stock seminar. I just think I got to get my money back, and let's just call it good. And you said, do me a favor. Sit through the whole weekend, and at the end of the second day, if you still feel this way, you can have your money back. And I was like, all right, you know what? That's fair enough. And then once we really got into stuff and I started looking at more and more what was going on with technical analysis, there was way too many examples. Like, it wasn't like you showed two charts, right?
Right.
It was over and over and over. And all of a sudden, I'm sitting there thinking, all right, I have a decision to make right now. I either turn a blind eye and say, this guy's full of it, or I have to be realistic that maybe what I just learned over 4 years is not all there is out there, and I owe it to myself to take a deeper look. And it just threw me for such a loop, because I just spent all this money on a degree. Then I thought everything I learned was just the absolute end-all, be-all truth about stock valuation and trading, and it had really nothing to do with trading from this viewpoint. So it kind of rocked my world a little bit, and I had to do some soul searching, and I kind of was sitting there for a couple months like, what's real? Like, what just happened to me? It's like the Matrix just opened up, and I saw behind the screen, and I was like, oh,
well, I had a similar experience. I mean, my whole entire educational background is in accounting and finance, and I'm not sorry that I took that up. I'm actually great because
it kind of rocked me a little.
As you know, accounting is the language of business. It taught me how to basically rip a company apart and look inside of it and see what makes it tick or what have you. But those things are very interesting things to know and a skill to have. But when it comes to trading, it has very, very little relevance. So what I want to do right now is very briefly talk to the audience about what fundamental analysis is and what technical analysis is, and then let's wage this debate. Fundamental analysis, in my opinion, is the attempt to do what accountants do. They attempt to understand what makes a company tick. They attempt to understand how the company makes money, and they attempt to judge based on mathematical industry standards through various mathematical formula whether the company is functioning efficiently enough to continue to grow into the future. So, for instance, a company can be making money, but making money very ineffectively. And it could be making a lot of money, actually, but not efficiently. And that can potentially be a problem in the future. So they have these various ratios that attempt to judge not only if a company is making money, that's the basic form of accounting and fundamental analysis, but how efficiently are they making money? What's the sales to net ratio, and what's the PE ratio from, all of these different ratios or what have you. And, I like the idea. The idea is, let's come up with a standard set of mathematical formulae, and let's judge. Let's use this standard, and then we will have a standard over which we can compare, all right, all the companies. We can just drop them into this matrix of formulas, and whoever has the best mathematical formulas win. And those are the companies that are the most fundamentally sound. And then that should be able to predict what the stock should do in the future. Now, as I explain that, it doesn't even sound intelligent. And I was educated as an accountant. You see, for me, even if that hocus pocus list of numbers could give you an accurate picture of what the company is right now, if you could take the data from the company's past, last quarter's earnings, last quarter's cash in the bank, last quarter's inventory levels, last quarter's sales, last quarter's expenses, last quarter's taxes, if you took all of that and you could come up with an accurate way to say, this company is valued at this price. If you could literally do that, and we can't, because there are ethereal things that go into the value of a company, like their logo. If it's recognized worldwide, what value do you put on their logo? On the apple of Apple. What value do you put on that? That means something. So it's impossible to do that, but let's say you could do it. It still is coming up with an accurate picture based on numbers in the past, which has no relevance to what is happening right at this instant, this moment, which is what a trader has to do. A trader has to assess now. And so fundamental analysis to me is the art of never being in the now. I take numbers from the past to try to find out what the company might be in the future. But I'm trampling all over reality because reality only exists in this moment right now. So technical analysis zeroes in on the now, right this moment, right this second, right this instant. Who's in control at this moment? Is it the buyers or the sellers? Who is driving the trend right now? Is it the buyers or the sellers? Is the path of least resistance up in the stock or is it down in the stock? I don't give a hoot whether or not it's the fundamentals say bad, but if the now says good, I'm going with the good. I'm going with the now. I'm going with reality this moment, not some pipe dream or some image or idea created by numbers 3 months ago or 6 months ago. So to me, the hocus pocus, in reality, technical analysis has gotten the stigma of being the hocus pocus analysis of the industry, when in fact, I believe fundamental analysis is the hocus pocus of the industry. You know why? Because they never touch now. They are always in the past or in the future. They're always, let's look at what they did over the last several quarters. And then let's try to extrapolate from that where they'll be over the next several quarters. They never deal with the reality of the moment. And technical analysis keeps you rooted right here, right now. I don't care what the story is, who's dominating the stock right now. I don't care what the story is, what direction has the path of least resistance? I don't care what the story is the river floating upstream or is the river floating downstream? I don't need numbers to tell me that. I don't need numbers to tell me which way the wind is blowing. All I have to do is lick my finger, stick it up in the air high enough, and whichever side of my finger is the coolest side, that's where the wind is going, and that's how I'm betting my money. I'm not betting my money based on some analysis by fat, overweight gentlemen in $2,000 suits sitting in some air conditioning office coming up with numbers and projections. That's not how I'm going to make my living. That's not how I'm going to make intelligent decisions. They can't be consistent from that. Neither can I be consistent from that. So to me, as a technical trader, the way I look at both of these things, Dan, is that once again, technical analysis is the art of what is real today. It doesn't attempt to really project too far in the future, and it reads the past a little bit. Of course, we all have to do that in every area of our lives, but the past is used to put the now in the proper context. And the technical trader is not necessarily trying to predict what is going to happen. The technical trader is trying to assess what is real right now and let me go with what is real right now. So as a technical trader, you have to become talented at looking at what most people regard as chaos. And out of the chaos, you must pull out reality. You have to see value where most people see chaos. But right now, most people come into this game and they believe that they need to be able to read the future. In order to be successful, I have to know where Apple's going to be in 2 days, 2 days from now, 3 days from now. No, you do not. You do not have to know. The same way the poker player does not have to know what the next card is going to be. Now, you do have to be able to assess the likelihood of certain things happening or not happening, but you don't have to know. You just have to be able to assess what is likely, and if you're wrong, you have to have something in place to protect yourself. And let me give you an example of that. And Dan, I'm sorry for hogging up the mic, but you know me.
Oh, I'm used to it. 100% used to this.
But check this out, traders. And Dan, I know I'm preaching to the choir, but check this out. If I'm about to leave my home and all of a sudden I open the door outside and say, oh, wait a minute, there's a whole bunch of dark clouds. I mean, it's 1 o'clock in the afternoon, but it almost looks like it's 8 o'clock at night. And then I feel moisture in the air, and there's a heaviness in the air. It's a dampness. It's very humid. And then, I feel little tiny, ever so slight drops. I said, oh, wait a minute. It's going to rain. Let me go back and get my umbrella. Now, I don't absolutely know it's going to pour or even rain. I see the signs that suggest that the likelihood of heavy rain is going to happen. But do I absolutely know? And do I need to know in order to get my umbrella? No, I don't. All I need to do is read signs and say, you know what, the likelihood, let me grab my umbrella. I don't have to know. And if it doesn't happen, it doesn't happen. I still have but here's what most traders act. They think they have this unrealistic view that they're supposed to be right every single time. So whenever they're wrong, something has to be fixed. Something has to be tweaked. Something has to be corrected. So here's their scenario. When they finally reach their restaurant and they're coming out of their they have dinner, they're coming out of the restaurant, and now the skies are open and they're blue and they see all the stars and they realize, shoot, it never rained. God darn it, I brought my umbrella to this restaurant, carried it around with me the whole while, and it didn't rain. My God, I shouldn't have brought it. I don't think I shouldn't have brought it. I should have not saw the signs that way. No, that's idiotic. Just because the probability didn't happen at that one time, they think something's wrong and something has to be corrected. I will not bring my umbrella the next time. This was wrong. I'm carrying this around for nothing and yada, 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 yada. So the next time they open up their door, they see heavy clouds, dark gray, almost black clouds, feel moisture in the air, feel tiny little drops. And there's an instant where they think, let me go get my umbrella. And then they remember, no, last time I did this, it didn't rain. So you know what? I am not going to take my umbrella this time. No. Not going to trick me this time. And then they get out, of course, minutes later, and they are drenched. And then they start this process over and over again. The point is this. We are odds assessors. As technical analysts, we use the now, what is happening right now, to assess what is likely to happen in the very, very near future, 20 minutes from now, or 1 hour from now, or 3 days from now, or several months from now. But we read the now. We take a look at the past, but only in relationship to its ability to give us a clearer picture of right now. Right now, every single up day in this stock is bigger and more powerful than every time there's a down day. What the heck does that tell me? It tells me that every time the Bulls have the ball, they press harder and faster and further. And every time the ball gets switched to the Bears, the sellers, they can barely push it in their own desired direction. So who's in control? The Bulls are in control. I go with who's in control. I bet with the winner. Sorry, guys, I don't bet with losers. I bet with the winner. I'm looking from a technical perspective to determine, to isolate who has the ball most of the time and who accomplishes the most when they have the ball, and I'm betting with that team. And you know what? Sometimes it doesn't work. Sometimes when I bring my umbrella, it doesn't rain. But most of the time, it's going to rain when I see those signs. And most of the time, in that scenario where the up bars are bigger than the down bars and the up bars are greater in number than the down bars, I'm betting with the up. I'm going with the power. I'm going with the river. I'm going with the flow. I'm not an idiot. I'm not going to fight the now, no matter what some analyst told me based on the fundamentals, based on his mathematical formulas in his air conditioning office with his private driver waiting for him 17 stories below in some New York City street. How do you like that, Dan?
That's a pretty good summary right there.
All right, your turn, man.
I mean, yeah, I'm not going to give a soliloquy quite like that, but the easiest thing, because I get the argument, and we get see traders in the room that want to bring that up, and they ask the question. And from a pure trading standpoint, especially a day trading standpoint, the fundamentals, they can't matter. You don't have time to even look up fundamentals, to never mind try to understand them when you're making a trade. It has to be, like you said, what's happening right now. Where's the money moving right now, and who's moving it? And it's not you, and it's not me. It's the powers that be that have the money. And if they're betting down, then I'm going down. If they're betting up, I'm going up. And they're not looking at fundamentals on the macro scale. They might know something. They might have some insider information they shouldn't have. But you can't tell me that fundamentals change that much that quickly to move these stocks around. Like, let's talk about two big names for one moment. Let's talk about Facebook. All right, they just had earnings. And Apple just had earnings, right? So you're trying to tell me that Facebook, who has 2 billion shares outstanding, I think, and their stock just went up over $10 on their earnings report. So you're telling me that the fundamental valuation of that company just improved by $20 billion.
Right, just overnight.
Right, and Apple has 5 billion shares outstanding, and they just had earnings, and they're down $10. So their value, their fundamental analysis just changed by $50 billion overnight because of I mean, give me a break. It's absurd to think that. And if you go back and look at these earnings reports, right, which are supposed to be what fundamentals are based on, a stock will gap up $10 or $12, and then 3 days later fill in the gap. So wait, the fundamentals said it's worth $20 billion more, but then 3 days later they changed their mind, and now it's not worth the $20 billion anymore. It's back to where it makes no sense.
This is why we're saying to me, that's the hocus pocus part of it.
Exactly.
And
as a trader, especially as a day trader or an intraday trader, it means absolutely nothing. I don't even care what the fundamentals. The only fundamental I really want to know about intraday, I want to know how much volume the thing does on a daily basis, just so I don't get caught. Because I like to trade around. You do the same handful, and I have my go-tos. But I also am a pattern-based trader. If I see one specific play, I'm going to go after it. And I'm looking at a lot more stocks in the day, and I have the trading room feeding me ideas all day to talk about. So I might see some things and say, you know what, I really like that pattern. I've never traded this thing. I just want to see what does it do. If it's doing 100,000 shares a day, I don't want to touch it. It's a thin stock that's being manipulated. If it's doing a few million shares a day on average, and I can check that fundamental off of the stock chart in about 10 seconds, I can look at a daily chart, scan over the last 6 months, and see what it trades.
Right.
Other than that, there's times I've traded stocks, I don't even know what the company is.
Well, I'm not even quite sure I would even call that piece of information fundamental in nature. It's technical in nature. The number of trades.
It's a volume recorded,
Right.
but I guess that's about the only thing. Like, other than that, I can see the spread, right, when it's trading on my level 2.
Uh-huh.
And I can check a 30-day history or a 6-month history of daily volume. And other than that, like I've said, man, I've traded symbols. I don't even know what it is. Like, I don't even know what the company does and make money. So how important is the fundamental? If I don't even know what you do, I don't know if you sell products, if you own technology, if you're it doesn't matter to me. Right? I want to know what's happening right now. And if for some reason there's a momentum movement to the upside because somebody with more money than I have knows something, whether it be fundamental, insider, technical, I don't care what they know, but they're moving it. And the chart is showing me that it's moving higher or lower.
Right.
That's what, like you said, the wind's blowing, I'm going that way.
Well, let me tell you and our audience, and I know you know, Dan, but I'm going to tell you how I think fundamentals hurt the world of traders. I think it's an evil, and let me tell you why. It does more harm than good, because let's say, for instance, you go into a play. You're playing a stock you believe in that can potentially make you and your family money. And you have bought into the whole hype of something that it's going to, this is undervalued and, it's going to go up or what have you. But you have given yourself, intelligently so, a total maximum amount to lose. You're like, listen, I'm going to give this stock a shot, but I'm not going to lose everything on it. So you draw a line in the sand. You say, you know what? Listen, I'm not going to lose more than $2,000 on this stock. If it backs up and loses me $2,000, I'm gone. Now, stock starts dropping. You're in it. Stock starts dropping. And when this happens to most traders, the first thing they search for or want to search for is some reason why. And every time someone comes to me and asks me, Oliver, why is this stock going down? I know that they're hurt and bothered by the fact that it's going down. And it's the worst question to ask, because what they're searching for is they're grasping for straws, and they're searching for an excuse not to eliminate their problem like they promised themselves they were going to eliminate. So they're down their $2,000, but they're searching for a reason not to do what they promised themselves to do. They're looking for an excuse not to be disciplined. They're looking for an excuse to play ostrich and put their head in the sand and pretend like the problem's not there. Oliver, why is it going down? Please give me something to make me feel better. Please give me a story. Please give me some reason why I shouldn't eliminate this the way I know I should be eliminating this. And what they're looking for is an excuse, and they're looking for it in the fundamental world. See, what sells, the reason why the industry disrespects technical analysis is because technical analysis doesn't sell. Sexy stories sell. Sexy stories gets old ladies on the phone, right? When you bother them over dinner, it excites them to take portion of their retirement money and to put it in something. But when I say, listen, Apple has just on the weekly chart dropped to its flat 200 period moving average, that's not sexy. That doesn't get anybody's juices flowing. But in order to get money into the industry, you have to come to the general public with a sexy story, and fundamentals are sexy. Well, they've got this product, and, the management is filled up with people who graduated from Harvard and Stanford and so forth and so on. And, their new product line is coming out in 3 months, and I think we should get ahead of this. And, their sales numbers have been very strong. And I had an individual that visited the plant the other day, and the plant was just buzzing, and everyone was very happy and just laughing and wah, 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 wah. And that's what sells. That's what gets people to open up their wallets. And so this is one of the main reasons that technical analysis, where you deal with reality and you focus on what is happening right now, and you're judging what is real and what's the most important thing, it's just not sexy enough to get the general public to keep emptying their pockets and pouring it in for us to take, Dan. Now, check this out. In a nutshell, technical analysis is all about following the footprints of money. Listen, if a stock goes from $20 to $24, what did I do? Nothing. What did you do, Dan? Nothing. What did anybody listening to us do? Nothing. Absolutely nothing. Because in order to make a multi-billion-dollar company go from $20 to $24, it takes a lot of money to move it that way. Now, we make money by this lot of money. We make money by the big guys who swing big bats, those who have billions of dollars under management. We make money by jumping on this. We don't make money by being right about a product. We make money that if we buy at 20 and then later after we buy, billions of dollars more come in after us to lift us to $24. Now, the reason why billions of dollars came in at 20, I don't care. I just want to know, I just want to assess, is big money flowing into this stock right now? Why they're flowing it in makes absolutely no difference to me. Why is big money leaving right now, causing the stock to drop? Why is there more supply than demand? Who cares? Does that change the fact that there's more supply and demand and the stock is collapsing? No. No answer to the question why, which is a search for a fundamental, no answer to the question why changes anything. No fundamental changes the fact that the stock is collapsing. But yeah, Apple's dropping, but the fundamentals are still powerful. They've made more money than any other company in the history of the planet Earth. Why is it dropping? Who cares? It's dropping. There's more supply than demand right now. Money's leaving the stock. What else do you want to know? What else is there to know? And this is the problem with fundamental traders. Traders who rely on fundamentals and get hooked on that hocus pocus stuff. It has no relevance to what is happening now. And every now and then, okay, a stock is moving up and the fundamentals are great. But you know my analogy with that. That doesn't mean that it's right. You know, a broken clock feels great twice a day, every 12 hours. A broken clock says, yay! But that doesn't make it fixed. It's only right, and it can only high five you 1 second out of every day, 2 seconds out of every day, sorry. But just because it happens to match every now and then doesn't really make it right. And again, just because you can be even right fundamentally about a company doesn't mean it can't drop on you. You can be wrong fundamentally, and it doesn't mean that you can't make money. So to me, the fundamental story is irrelevant. Whether it's right or wrong or spot on or way off, it has zero relevance. It does not change reality to me. You know, you can't stop me from bringing out an umbrella if it's raining hard. And the fundamentalist is going to say, yeah, but in reality, it should not be raining because the weather bands are moving in this direction or whatever. I don't really understand. It's stupid while it's raining. But in reality, based on these formulas, it should not be raining. I don't give a damn about your formulas and why it should not be raining. The fact is that it's raining and I'm bringing my umbrella, sir. So whatever the story, I just respond to the rain. If it's raining, I bring my umbrella, and no one can stop me from doing that. If the stock is going down, I'm shorting it. No one can stop me from doing that. I don't care what your story is. I don't care what your mathematical formulas say. I don't care what your models say. I don't care what your models say. But the stock is oversold and it's undervalued. It's trading below book value. It should not be down here. Dude, the stock is going down. I'm shorting it. I don't care what it is. That's all story and hocus for me. The reality right now is money is leaving. People are running out of the theater. Someone yell fire, and everyone's running out of the theater for one exit sign. Dude, I'm shorting. I don't care what your story is. Listeners, you understand what I'm saying? I wish I could see you. I wish you could respond to me. Some of you can respond to me here. Thank you very much, guys, for participating. Carmen, you're always here. Thank you. I don't know if you're still here. Stephen Atwater is here. Dan, you can't see this. Big T's always here. Who else is here? Silvio Reyes. Where are you from in Brazil? Silvio, and it sounds very Brazilian to me. Rio. Are you from Rio? Who else is here with us today? I want to give some props to Jan is here. Jan Hume, awesome. Awesome development in your trading lately, Jan. I really appreciate that. It's awesome. I see it. I think you're a little hard on yourself, but that reminds me of me a little bit back in the old days. Clayton Kimbrew, thank you for being here. Thank you for chatting with us. Thank you for being part of the live radio chat. And Joe, you're forever here. It's like you're part of the furniture. I don't even think you leave the chat. I think you're here like just 24 hours a day and you just wait for me, right?
Oliver, what you were saying a minute ago, this is an argument I've had too. You said it's, the hocus pocus part. And so many fundamentalists want to say that technical analysis is like witchcraft and it's voodoo and made up stuff. And my argument has always been this. The technical analysis is based on what really did happen, right? The bars are based on prints from time and sales. The moving averages are calculated based on price that occurred. So technical analysis in what you're looking at is real. These numbers truly happen. Fundamental analysis is the most made up garbage ever. And as an accounting major, you know this. You want to make a number
Absolutely.
hit a certain number, you'll make it do that. And if people want to tell me that the fundamentals are real and you're basing it on what someone's telling you the number is, how do you know that number's real? I know the technical analysis I'm looking at, the bar is real. The print happened. That's real to me. The EPS per share, I have no idea where they got that number. They made it up based on however they wrote off this, wrote off that. We'll take this loss next year. We'll carry forward this.
Yeah.
We'll give ourselves a tax credit here.
Yeah.
Like, give me, so that number's real?
Yeah,
and if
absolutely.
you think fundamentals are real, I got a couple words for you. Enron, WorldCom, Lehman Brothers,
Oh, wow.
Bear
Yeah.
Stearns.
That's true. Yeah.
How about their fundamentals? I remember Jim Cramer screaming up and down, do not take your money out of Bear Stearns. They're fundamentally fine. There's nothing wrong with the company. And 2 weeks later, it was $2. So don't tell me the fundamentals. Even if you want to believe in it, they're not. That's the most made-up number ever.
It is.
A
It's true.
fundamental report. Give me a break.
Dude, yeah, and the things that are hidden and pushed under the rug,
Oh,
like you
come
said,
on,
or
man.
delayed, or they have fancy words for it. Let's delay this, defer that.
Right,
let's
right,
no,
right.
and let's delay the bad stuff, but let's accelerate the good stuff. So we're gonna accelerate appreciation and delay this and.
That is the most manipulated numbers ever.
By the time their high-level finance people wind up painting the picture, it's whatever they want it to look like. It's crazy. It's crazy. And yet, like I told you, the industry spends a lot of money really promoting the fundamental view and poo-pooing the technical one because, if people started realizing, like, let me focus on, the entire industry is built on this, but if people started realizing that the better approach is to approach it technically, approach their trading and their market play technically versus fundamentally, I believe that the industry believes that it would be hurt by that switch. And like I said, there is no easier way than to stop a person from liquidating. Like, they put their money in and you don't want them to take it out. So there's no easier way than to give you a story. But wait a minute, you're doing this wrong. You know that being a contrarian is the way to be in this business, right? Yeah. And then, but listen, Your impulse to sell right now, I understand it, but it is the wrong impulse. In fact, let me tell you what the CEO just revealed to us on the call today. And there was over 2,000 analysts on the call. And after he explains that, it says, and see, so things could not be better right now. But the stupid traders are driving it down, the short sellers are driving it down, and this is another opportunity for us. In fact, instead of thinking about selling, I encourage you, Dr. Johnson, to dig deep and see how much you can come up with to buy more. In fact, all right, as soon as I hang up from this phone call, I have to get on another phone call where another one of my clients picking up an additional 20,000 shares of this. So how much should I put you down for? That's the industry, dude.
That sounded like a scene right out of Boiler Room.
Of course, man.
I mean, that was better than Vin Diesel did it.
That's the industry, dude. That's the industry.
No, that was perfect. That was.
But no, wait a minute. Wait.
Man.
Absolutely. Dude. It's how the industry has shaped itself and has encouraged trillions of dollars to come into it. And the technical approach just simply doesn't do that. It's not sexy. It's not, and it forces people to look at reality. We teach people how to look at the market to glean the truth or reality from it through the eyes of certain technical things. And it's no different from reading the weather or sticking your finger in a river and saying the flow, this current is really strong this way. And that's technical analysis. It is, which way is the wind blowing the hard, you know? But it's changing. Okay, but which way is harder? That's technical analysis. Well then, okay, every now and then the wind switches, but when it turns back the other way, it's harder this way. So we're doing this way, you know? There's a wonderful, I'm not sure if I can remember everything, but there was a wonderful post. I got like 200, 300 likes on this post a couple of years ago. I can't remember where I found it. It's not mine, but it was some sign on the side of a warehouse, and I can't remember everything, but it had a fairly sizable rock tied to a rope, and it was hanging in midair. So this rock is tied to a rope. The rope is attached to something very high in air. So there was a sign behind it that says weather forecaster. So it said something like, if the rock is wet, it's raining. That's technical analysis, right? If the rock is swinging, it's windy. That's technical analysis, right? If the rock is white, it's snowing. Right? That's like technical analysis, right?
That's it.
If the rock is jumping, I forget what it was. That's earthquake. Right? If the rock is gone, that's hurricane. Dude, it's the most accurate. It's not weather meteorologists with their studies and their formulas and their machinery and their books and their scientific theories. It's a freaking rock. And reading the weather accurately, you won't be wrong. If it's white, it's snowing. If it's wet, it's raining. If it's swinging, it's windy. If it's jumping up and down, you're dealing with an earthquake. If it's gone, it's a hurricane. Dude, that to me cuts through and clarifies and captures the essence of technical analysis. It's just reading what is and then making your decision. It's right. The most real thing you can do.
Right. And then if what is supposed to happen doesn't, then you make the other. And that's where I think people lose the technical analysis. You alluded to that earlier. You know what you're supposed to do, right? So you make your decision. And then if it doesn't follow through, then you have to make the other decision. So it's like going out. It's not supposed to rain today, but I'm bringing my umbrella anyway. Then when it starts raining, that would be like standing there and not opening the umbrella.
Right.
What are you doing? It's raining now. Yeah, well, I don't know. I didn't think it was going to. I just brought it, but I'm not going to use it now. I'm just going to stand here and get wet. Okay,
Right.
but it's raining. So open the umbrella, right? So you made a decision, and then when it didn't happen or what you thought might happen did, you've got to make the other decision. And that's where I think traders lose it. They make the first side, but they
Right.
don't make the second choice. When it
Well,
doesn't,
I think that-
when it works, they're great. When it doesn't, they still want it to work.
Well, in all areas of life, I think that change is difficult for the human species. I think that change, in particular, change that is almost an admission that I was wrong, is the most difficult. Change over time and generally is just very difficult for human beings to do that. We are creatures of comfort, and we prefer the familiar to the unfamiliar. We don't like to live on the edge, and being free is practicing doing exactly the opposite of that. We hail consistently not changing. We call being conservative better than not being conservative. We call a person who is constantly flip-flopping. We don't like that. We want the person to be the same. When we catch a person that says something different from when they said what they said in the past, we think that's bad. And that could be growth, but we think that's bad. But you said 25 years ago, but dude, I'm a different person 25 years from now. I have different ideas. I've grown. I've become more intelligent, more experienced in life. Don't hold me to what I said 25 years ago. But we, even in our political life, we say, yeah, but this person 10 years ago said this. Dude, the person can't change. The person can't grow. The person can't live a deeper, richer life that's brought them to different conclusions. Why are we putting people in boxes? But change in general is very difficult for the human species to accept. And in trading, we bring that human trait into trading, which is why I always say, in order to become successful and as a master, as a trader, you have to drop human tendencies. In a way, you have to reprogram yourself, rewire yourself to become inhuman during your trading. Not outside of your trading, but during your trading, you got to snap and be an alien in a way. But change in general is difficult. Change that admits that you're wrong, like most people are just not going to do it. They're going to search desperately for any reason that salvages their ego and their image. The ego is an image of themselves. It is not themselves, but it's an image, and they protect that image from being shattered, when in fact, the very best thing that can happen to you is to drop the image, to shatter the image, to break it, to destroy it, to admit that you're wrong. That puts a blow to your ego, so that now you no longer have this filter between you and reality. The ego clouds reality. The ego is the entity that stands between you and what you identify. And so, yeah, it's very difficult. And you're right. The failure to pull out the umbrella that you said you were going to use in case it rained, and to not pull it out and use it when it starts raining, is the same as a trader reaching his stop. So listen, in advance, he said, if it rains, if the stock rains on me, and if it hits this level, I will open my umbrella and stop the rain. I will stop the pain. But to not open your umbrella and to stop the rain is the same as to not stop your pain in the stock. It's crazy, but it's a great analogy, Dan. It's a great analogy.
Are we? Do we want to give away some free advice, some free tips? Because I If we're doing that on the show, or are we saving that for later?
Free? No. Let me just give. Let me give. Wait. Let me give a.
Right right.
Let me give a little link so where people can PayPal some money in, and
there
then whoever hits the link. No, I'm teasing. Right?
This is because you were just talking about a subject that comes up all the time, and I was going to say I could fix this for a lot of people pretty quick, but I didn't know if we're supposed to give it away or if we're collecting the $9.95 or how are we doing that. Just give it away. Right. No, I'm just playing. The easiest thing that I've found that helps a lot. It may not help every single person because sometimes it's deep-rooted stuff about the being wrong, but the biggest advice I've ever given that's worked wonders for people is, and I've told them this, I said, listen, man, I don't deal with that anymore about worrying about being wrong. And they said, well, how'd you get over that? What do you do? I said, I'm just never wrong. And they said, what do you mean you're never wrong? I said, dude, I am never wrong. The stock is wrong, not me. So when I make a decision about a stock, it's because the stock was supposed to do X. And when it didn't, well, the stock is the stupid one. The stock made the mistake, not me.
I like that.
It doesn't. It's wrong. And I have no problem cutting it loose. I don't want to associate with people that are dumb and stupid. So the stock's not doing what it's supposed to do. It doesn't know any better. I'm out. Do with me. That way, I'm not wrong. I've detached myself from the trade. It has nothing to do with me anymore. So I can make decisions all day long and change it 30 seconds later because it's not me. And once I was able to let go of that, it was simple to take stops. Because I'm not wrong anymore. Every day I trade, everything I do, I'm 100% right. That's it. I'm 100% right.
I love it.
Stock's the one that made the mistake, not me.
I love it. I love it.
And that lets me cut them loose.
Yeah, it's psychologically separating yourself from the trade. The average trader feels detracted from when they experience a loss. Their money is almost their own identity, and the loss of it is the loss of the self to them from a psychological point of view. They have taken a chunk out of themselves. They have become less of an individual, smaller, less than they were when they entered the trade. And this is psychologically very painful and is avoided at all cost. And then what happens from a psychological point of view when you associate you with your loss, that it's not a loss of just simply the trade, it's a loss of me. And this is what's going on psychologically. This is less of an individual. They feel hurt, damaged. And then they take this image, this damaged image of being less of an individual, not being worthy, and they take that image into the next trade. And then they experience a loss there, and they come out of that trade feeling even less of a trader, less of an individual, less of a person. And now the image is even worse. And then they take that image along with them into the next trade. And it becomes this vicious viral cycle. And it is the number one reason why losing traders can defy mathematics. You see, if you flip a coin long enough, you're going to get about 50% heads and 50% tails. We know that from mathematical law. But then why do traders who are really bad lose way more than 50% of the time? Number one, commissions and fees add to the skew toward the more than 50% losses, of course. But more than that is this psychological issue. It's an ego issue. When you disassociate yourself with the act, which is what you just did, Dan, where I'm not wrong, this employee is wrong. An employer who hires someone who makes a mistake, fires the person, and does not feel like it was their fault. They feel like it's the fault of the employee. Every time I buy Apple, Apple works for me. You better make me money or you get eliminated. It becomes my worker. It's there to serve me. And yes, when it fails to serve me, I cut its neck off. And I don't feel less because I've done that. I don't feel, like you said, Dan, that I have failed. I feel that Apple has failed to serve me. And I take myself, my full self, into the very next trade with my head held high and my shoulders pushed back. I am not less of a trader. I am not psychologically damaged by that. And so that's a great thing. Dan, Dr. Dan, thank you so very much for allowing me to surprise you today, buddy.
always
We've got to do this. We got to do this. We got to do this. We'll have it planned next time.
Next time I see the Skype ring, I'm going to think twice.
Absolutely. No, we'll have it planned next. And you know what I wanted, Dan, is if you can go to your group of traders and let's cull out a trader or two that's in the process of developing. I don't want, we can bring occasionally really successful trader making a lot of money, but I want to bring someone who's in the midst of developing, who's starting to get it, who's just starting to see some light, and who's starting to put things together. I think that would be extraordinarily valuable to have them on the show. And I hear your little kids in the background. I love that.
You hear them? They just ran in. They know it's time.
It's time. All right, Dan, listen, man, thank you so much for joining us. Dr. Dan, ladies and gentlemen. All right, thank you so very much.
Thanks for having me. Look, we'll do it again next time for sure.
Awesome, man.
Hi,
awesome.
baby.
Yeah.
They come in and they go, Daddy done. Daddy done.
Daddy done. All right.
Daddy done.
Gonna give you a big round of applause here, Dan.
Thanks a lot, buddy. Appreciate it. I'll see you guys next time.
All right, man. Ciao. Ciao. Traders. We have one of the greatest opportunities available to us. We have the ability to work on ourselves, to make ourselves better, at the same time that we are working on making more, earning more, becoming wealthier, becoming more financially independent. And there aren't many activities in life that offers these two equations, these two things in the same equation. And trading is one of those rare things that you can feel proud about, because if you are starting to get it, you are starting to become a better person, a more disciplined person, a stronger person, a person who keeps their word and does what they say almost every single time. And this is a wonderful thing. And I am never one to tell you that it's easy. I will always tell you that it's simple, because it is. The market goes up and it goes down. What's complex about that? But it's not easy because it's psychologically challenging, emotionally challenging, and we have to put those things in check. When your money is involved, that even gets heightened to a much more intense level, the psychological and emotional part, because money is a symbol of your energy, what you have become, what you are in today's society. So it is very emotional to put it at risk, and you come across psychological challenges when you lose it. So it's not easy from that perspective, but the mechanics of trading are very simple. It's not something that's going to happen overnight, and I never want any of my followers to ever think that that is possible. That this is something that you have to dedicate a few years to. But a few years are going to come, whether you pick up the mantle or not. 2 years from now will come no matter what you do, I say, why not let 2 years come having worked on this? Why not have 2 years come and be able to say, I've got 2 years under my belt, I'm almost there, or I'm there. Or at least shot and know. But how tragic it would be to have another 2 years happen and still wonder whether the greatest activity on the planet is meant for you. Think about it. If you have any interest in joining us, I think this listenership knows how. iFundTraders.com. Hit the Programs tab. There are 3 ways to become our trader, to become funded, and see if this is for you. We offer a turnkey solution to trying this at a very, 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 very low price. It's not for everyone, but it might just be for you. Give it a shot. My name is Oliver Velez, and I am your trader for life.